Brian, the details are lacking, but the president did make this announcement on social media, calling it a full and comprehensive deal, one that's going to cement the relationship between these two countries for many years to come. Any reaction so far from the markets and from the business community?
Yeah, well, I mean, it seems like the announcement that, there will be some sort of announcement has markets excited. Currently, the markets are up. When you look at the S&P 500, up about 0.5%. The Dow Jones Industrial Average up about the same. You can see over 230 points in the first 30 minutes of trading here. But again, I think a lot of the market movements and just the general business community reaction to this is going to depend on the details of this agreement. Yes, the president is saying on Truth Social that this is a full and comprehensive deal. Is it going to be a full and comprehensive deal? I think that given the speed and just also the nature of the trading relationship that we have right now, as Vaughn just interestingly pointed out, which is true, that the United States has a trade surplus with the UK as well, and also understanding that the United Kingdom isn't necessarily one of the largest trading partners with the United States, at least by volume and by dollar amount. Well, yes, maybe this is just at least the first step, but at least it seems like in the early trading that markets are at least a little bit optimistic that this could maybe be the first domino to fall in what could be these other trade deals, even if not as aggressively fast as the administration had promised with the 90 deals in 90 days.
We don't know how big of a deal this really is at this point. And Justin, it would be just one deal with one country after the White House has boasted they will sign dozens of deals by July. How do you see it?
Well, actually, we do know how much of a deal this is or could be because we know a lot about our trading relationship with Britain. It's our 11th closest trading partner. It is responsible for 3% of total trade from the United States. And more than that, we can go a step further. Before all this began, we know the average tariff rate that the United Kingdom charged its trading partners was 1%. So that's the best you can do is move that from 1 to 0. And I don't reckon he's done that. So there's a chance, I reckon, maybe he's got our average tariff rate, I'm just guessing because we haven't seen the agreement, down from 1% to 0.8%. From a trading partner that's worth 3% of our trade. So if this sounds like small potatoes to you, that's because these aren't potatoes, these are tiny little peas.
So Neil, let me just reiterate what we have now heard from our guests and analysts here. Already, the UK buys more from the US than it sells to America. So the US has a trade surplus with Britain. That figure's rising. Why was the UK included in the broad tariffs to begin with? And how might today's announcement perhaps set the stage for other potential deals to come?
Yeah, look, the key of today's news and the reason markets are up is because it does show that there are off-ramps from this trade war that can de-escalate on a country-by-country basis. On the other hand, as the other guests are saying, this was the low-hanging fruit. This was the easiest one because of the surplus, because of the size, the scale, even the historical relationship, the kind of special relationship between the U.S. and Britain. Look, the big ones are yet to come. You know, we're going to have this weekend talks between Secretary Bessent and the Chinese in Geneva. That's a much more consequential for the economy, for the world trading system. What becomes of that? Do these 145% tariffs on China, are those going to be de-escalated anytime soon, or is that something that we're going to be dealing with for weeks and months? That matters economically a whole lot more than anything that gets done with the UK.
Neil, do you think this gives Secretary Bessent any more leverage heading into those talks with China this weekend?
I'm not sure about that. You know, the other thing we don't know about the UK deal is this 10% tariff that's kind of the across-the-board minimum, is that going to remain in place on Britain? You know, if that's the case, that's a signal that even countries that do things right, that have a trade deficit with the U.S., that are kind of good partners, are still going to face these significant levies, which is a lot higher than we had this time 6 months ago. So you know, I'm not sure that a deal with the UK changes the equation with China. And again, the economics, the size, the scale of those 145% tariffs on Chinese imports, just a different order of magnitude than what we're talking about here today.
And Vaughn, wouldn't this all have to be approved by Congress? How long could that take?
Right. I don't want to sidestep your question, Anna, but I think that's a serious question here, is the extent to what the details are of this trade agreement. Right. The president has contended to a certain extent that he has the executive authority to negotiate foreign policy. At the same time, the Constitution is clear that foreign commerce falls under the purview of Congress, and that it has been long-standing policy that Congress approves trade deals, much like they did the USMCA trade agreement. But even if you go back to just before President Obama left office, he was negotiating the Trans-Pacific Partnership, and there was much rancor even within his own party over fast-track authority, just to give the president the negotiating power to be the one negotiating directly with the more than dozen other countries as part of the TPP. And that wasn't even a discussion ultimately on whether TPP would be approved by Congress or not. And so what you're seeing in this situation is that Congress has effectively ceded negotiating power to the President of the United States. And based off of the details here, I think that'll be a conversation up on Capitol Hill, the extent to which any sort of trade deal here that is to be announced in the next hour ultimately needs congressional approval or not.
And as we await this announcement from the Oval Office, Justin, UK deal or not, Trump's tariffs have already sent shockwaves through the auto industry. I mean, just in the last 24 hours, Ford announced it's raising prices on several models. The world's biggest automaker, Toyota, says tariffs are going to instantly wipe out over $1 billion in profits. Does any of this translate to better outcomes for the U.S. auto industry, which is one of the stated goals?
Well, I can start with my own personal finances here. I've been needing to buy a second car for quite a while, and seeing these tariffs come in, I don't want to pay 25% over the odds. And I think there's some chance at some point this administration's going to back down. So I've stayed out of that market. I'm not advising your viewers to do the same. But what that means is there's a whole lot less demand for US autos right now. Second thing to realise is this whole mess has put the US on the cusp of a recession. The first thing that goes south when we go into recession is people stop buying those big durable goods like cars. And so potentially the president has put us right in the crosshairs of a real downturn that could really hurt the auto industry and my home state here of Michigan.
And in fact, the Fed chair, Jerome Powell, warned yesterday that the risk of stagflation is higher. Now, this morning, President Trump's calling Jerome Powell a fool. Brian, will this one deal alleviate potential stagflation concerns at all?
Not this singular deal, but again, I think it's all about the momentum in totality with whether or not there are other trade deals to follow. Because in the aggregate, yes, a number of countries signing trade deals with the United States, especially if you talk about China entering the fold. But yes, that would be impactful for the tariff uncertainty that the Fed chair spoke about yesterday when the Fed decided not to move on interest rates, obviously drawing the ire of the president, who has been very vocal in calling on the Fed chair, his own appointee, I should remind our viewers, to lower interest rates, which he didn't yesterday. The key word in the meeting yesterday with regards to the overall economic outlook was wait and see. That's what the Fed wants to do here. Yes, they could lower interest rates later on if the economy needs it. Right now, they see the economy as in good enough footing with unemployment relatively low, 4.2%. Inflation a little bit above their target, but still nonetheless not necessarily exacerbated at this moment. But again, this is all about the tariff uncertainty. The Fed actually, interestingly, still is holding on to this view that the tariffs could be, not to bring that word up again, but transitory if it's the case that a number of countries can sign a deal very quickly. But if they last for, let's say, 6 months or maybe a year, does that then bleed into something that could have a permanent impact or at least a medium-term impact on inflation? That's what the Federal Reserve is unsure about. How do they predict what's going on out of the White House? This is the first domino to fall. That's certainly encouraging, but does that point to momentum going forward? That's what the Fed wants.
And already we know that shipments to the ports like in Los Angeles are down right now. Therefore, even if there is a deal across the board over multiple countries to get the product moving again, still going to take some time. Neil, there's been this heated debate in just the past day or so about the longer-term view on the U.S. economy, and I want you to listen to the two sides here from Democratic Senator Elizabeth Warren as well as Trump's Economic Council Director Kevin Hassett speaking about this last night.
What economists, not politicians, economists are out there debating is, are we already in the recession?
Right, that's it.
Or are we just headed over the cliff into the recession?
I'm dismayed that they've got bad economic modeling of what might happen to tariffs. They said, if you look at the Wall Street folks, they're saying that the tariffs are going to crater the economy. Meanwhile, we got really strong jobs, and we don't have the inflation that they said was going to happen.
Neil, who's right?
Look, these big economic changes don't happen overnight. We've seen this with past episodes. You know, the stock market bubble of the dot-com era peaked in March 2000. There wasn't a recession until March 2001. The global financial crisis started in the summer of 2007. There wasn't a recession until early 2008. You can't expect for these changes that do have massive economic consequences to show up in all the data, in employment, in the unemployment rate, in GDP. It just doesn't show up overnight. These things move more slowly. So whether Senator Warren is right or not that we're already in recession, if there ends up being one, when does it exactly start? We don't know the answer to that. What we do know is that the fact that things have stabilized in markets does not necessarily mean we're out of the woods for what is to come.